Ira Epstein of Linn Associates with your agriculture update for this Thursday. And this is the 7th of March, 2019, getting on to 3:20 p.m. Central Standard Time. Tomorrow morning, I think it's at 11 a.m. Central Standard Time, we get the USDA supply demand reports. We have ideas on acreage planning, where farmers are going. It's all kinds of information from all over the world. You've seen a big amount of short open interest in the corn. The pros, I'm talking the funds, they are on the short side. This market's dropping hard, the same in the wheat. Do we get the old sell the rumors, buy the facts, or you went too far down, you get the correction? Hard to tell, but the report will be very, very much looked at and be a driving force for the day. Energy prices pretty flat today. Bonds and notes were up, and that's in large part because the European Central Bank, and if you look at the euro, you can see how sharply lower. Yeah, that's 124 points down, a new low for the year, is falling, as in my opinion at least, Europe made a mistake by stopping their QE program in December. They're already just 9 weeks later putting in the RTOs. They're already giving money back to the banks, trying to get them to lend it out. The problem there is on the lending, banks do what banks do. They only give to the best borrowers. They may not need it at this point. So when I look at the market right here, you can see on the weekly chart we're down pretty good. In fact, for the week we're sitting here down 8.5 cents going into the end of the week in the report. If the market rallies, don't be surprised if the 18-week average of closes comes into play. It's about 11 cents higher. When we look at what the market's done, I think you'd agree it's all come down. I asked my cohorts here in the office, and I said to them, you know, you're a farmer. Got to make a decision. Excuse me, are you going to plant soybeans now or corn? The interesting part is they're going for beans, they said, because they can still hedge up the noves on the board and still be able to produce a price that is enough of a profit. I said, not the corn. They said, not too many people switching to corn. It was just interesting to hear. And these are grain pros, so it's good to hear that. In looking at the market here, lower and low, higher high, so no trend going into tomorrow's report. You now have that solid resistance. I was saying it could get back 901, but look at this 917.5 area. That's got even more resistance in it, and with the market at 902, that's only 15 cents away. The market, even if it rallied up and through that and through, this 924 3/4, what you'd have in the market then would be a lower low and a higher high. The better odds favor that on rallies, you're probably looking at pros that'll look at that resistance point. In terms of Bollinger Band, you're under it. And as I've pointed out, soybeans are one of those markets that don't like to stay under Bollinger Bands consecutively, a lot of days in a row. Go back and I think you'll see that over and over on the charts. So I'm thinking that the market could be a setup for a bounce, but would I go into a report? Nah. In this type of market, looking at momentum, oversold. So let's discuss it as a chartist and nothing else than that. First off, whenever there's a key report, I always teach in my charting course, and you'll hear me say it here, you don't have to stand in front of a train, why are you? Number two, if you look at the market, you got the higher high, lower low pattern, oversold condition that has hit some downside targets, resistance back at 917.5. The meal market looks a lot different. It is a pattern of lower highs, lower lows, bearish. Momentum is pointing down and not oversold. Bearish. Resistance back at 909.30. If the market, 309.30. If the market were to rally a lot, it has to get through 311.40 to negate the downtrend, but nothing on this chart could start an uptrend. Could the market still probe down to the lower Bollinger Band? Yep. In soy oil, I think the pros stepped in and took money off the table today. The lower Bollinger Band was hit today. That number's 29.66. The last quotes were at 29.67. The market is oversold, now getting into the next support of the 100-day average to the Bollinger Band. I just think you saw some professional money coming out. In the corn market, same type of thinking. You've got the lower highs, you've had the lower lows, you made a new break low for the move in an oversold condition. Does not mean you can't fall out of bed, but I think the smarter money was taking money off the table today. In the wheat market, because of the embedded reading, this is the strongest of the bears. That doesn't mean that people aren't getting out in front of a report. But if they're in, they got to stay in basically until you lose the embedded reading. It's a lot of risk, but that's exactly what the trade is. In the sugar, the same thing. Look at how the market just keeps making lower lows. It is oversold. It has not yet hit that lower Bollinger Band. That band just sneaks away from this market. It doesn't have to hit it, but on rallies, I think the pros are waiting up here in the resistance of 1275 to 91 to sell. Other than picking a bottom, this market, and being oversold, the only reason to cause a rally would be an oversold condition. Coffee regrouped and now back into the downtrend. Lower highs, lower lows, but oversold. So I don't think the pros are going to be too aggressive with it yet, but the seasonals kick in at this time of the year where the market often points lower. In the cocoa, we had one rally up to the 18 and the 100-day average of closes, and that market rally just plain faded. And it also happened, if you look at it, in an oversold condition. That doesn't mean it stopped the pros from hitting the market there. They clearly did, and that's where you're at. Will it get back to the lower Bollinger Band? It could, but it is oversold. In the cotton market, this will be impacted by tomorrow's report. Which way, I don't know. You've got momentum trying to point down. You have the trend up. You've hit your objectives, as I define them, by the upper Bollinger Band. Supports back at the 18-day average of closes. In the meat market, I think you're trendless. You've got a lower low, a higher high. Yes, the bias is up as long as the market stays over this red line, which it's been doing, but it is overbought. Difficult market. When I look at the feeder cattle, it ended a wave of selling. This was yesterday. Oversold under the lower Bollinger Band. Are you going to push this out or not? That becomes the question. The first challenge of a Bollinger Band is often where pros, at least I teach this, where I think the pros take money off the table. So here you are looking like it's going to fall apart, and here you are today, right back to that 18-day average, came over yesterday's high. Those people look pretty smart that took off some money in that zone. And in the hogs, I've been telling you here, it's just choppiness right against that 18-day average, almost void of a trend. You know, one of the things I like doing the best, and I'm expanding this, is my morning subscriber video. Yesterday I talked to a client who was actually dropping the subscription. Yeah, you know, people do, they come, they go. And I said, why? And he said, well, he was trading in a market, an ETF, and he didn't pay attention to the embedded reading and he got himself caught. He told me which ETF. You know, I said, you know, I could add a few ETFs if that helps people. So I started adding some. So besides what I cover in the futures, which are all these different categories, within those categories, I'm going to bring on a few ETFs for you and help you with that. If I have enough demand for it, maybe we'll do an ETF one. You never know. But I do cover the market action, what I think the traders are doing, how the technicals look, and believe me, folks, I throw out buy and sell ideas galore in that video. I don't do that here. Number one, what this is about is the generality of the market. What does the trend look like? On the video you're looking here that I do in the morning, it's trade ideas. Do this, do that. Here's a stop. Here's the objective. Let's see how that will work for you. And why do I do that? Well, if you're like me, you're often questioning your trades. Let me tell you about me. If you think it's always buy here, sell there, boy, I've been doing this 5 decades, you question yourself. Everybody does. I wish there were some people I could go and throw these ideas at, and there are. I have that advantage. You don't. So I'll ask people, what do they think, and I take it from there. The advantage I have is how many can you get on the phone with and talk about a chart? How many can you look at a video and they're looking at things like you look at it and you go, wow, that makes sense. Now, I put these videos out at a specific time. I do them Chicago time. I record at 8:30 in the morning because that's when the grains reopen. That is when the meat market is opening. It's when I'm getting the option pits going. The stock market's coming online now, the actual cash market and the like. That is why I record at that time. I could record at 7 in the morning, but you're not going to have the cash market and the stock markets open and so on and so forth. So I do that. Now, if you live in parts of the country, I had one person tell me, well, I record too late. because he's on the East Coast. I can't change the time the market's open. So if my tape comes to him by the time he sees it is, let's say, 10 in the morning, the reality is the market's open just about a half hour before that. I mean, it's pretty up to date. How do you get this? It's really simple. The cost, there is a cost to it. It starts off at 26 cents a day, 26.5 cents. I think you'll find it well worth the effort. Give us a call. You can go to our website and you'll see under research or Ira's education, morning subscriber video. Click on that, or you can click right up here. It'll take you right to the page you need. I'm Ira Epstein. You have a good day.